Okay, Megawhale team, welcome back to the channel. Thanks for tuning into today's video. We're going to take a look at Bitcoin today, and we're going to be talking about the top 8 or 9 mistakes that I notice people making in the market regularly. We're going to give you a few strategies to avoid these mistakes, explain why these mistakes are very, very dangerous and detrimental to your profits, and understanding this can help you become a better and more profitable trader in the long term. Let's go ahead and bring attention to the pinned comment down below. Join our Telegram channel and get access to all of the updates, analysis, and a whole range of more stuff. If you're interested in joining our VIP trading channel, you can go ahead and contact me via this channel by clicking on my name over here. You can see this month so far, in 14 days, we've had 20 trades, 17 wins, and 2 losses in VIP. Absolutely huge profits. So let's go ahead and dive right in. Quick update for Bitcoin, and then we'll talk about all those cool top tips and mistakes and stuff. So Bitcoin is still very much playing within this ascending wedge. Now, we've talked a little bit about this yesterday. I want to go ahead and kind of piggyback off that. And I highly recommend before watching this, head over to yesterday's video, watch yesterday's video, because that is going to give you a much, much deeper analysis and update on the market, on the technicals, on what is happening right now, what we can expect than today's video. Today's video is purely a little update, plus this risk management stuff and all these different mistakes you can make and how to avoid them. So real quickly, we did have that weekly close, another weekly close, which is nice to see, above not only the 200, but above our major resistance support zone. Now, this was our open and close above the zone, which is a strong confirmation that now this zone is now support. It is looking favorable for Bitcoin. Obviously, we have this macro descending channel we still need to break out of to get that flip and get that downtrend break. When that occurs, I have no doubt Bitcoin will start moving very, very rapidly, and we'll start seeing some massive bullish momentum. But of course, we haven't really flipped this downtrend until we break through that zone. We push past that $28,000, and then we have our higher targets indicated by our next horizontal resistance zone, which is 36,000 to 37,000, and obviously the infamous $48,000 resistance. So right now, just keeping an eye on Bitcoin. We've talked about the possible directions. We talked about all this in yesterday's video. I'm not going to go into it too much more, but we are looking for a 4-hour close above this resistance line to confirm the move upward to this resistance range and hopefully retest that downward resistance, which is a huge moment for Bitcoin, retesting that resistance. The last time we came close to retesting that resistance was all the way back in April, and that was when we retested $48,000 and obviously had that huge fake out, that ascending channel formation, which we can go ahead and draw in real quickly. It was something like this over here, and a lot of people got faked out, got trapped in the market at the top thinking we're bullish, but we weren't, and we crashed back down. Okay, that's it for the update, guys. Let's go ahead and talk about the mistakes. So I think we're going to go ahead and talk about maybe 8 or so. And I think the first one I want to talk about is the saying. This is a saying I like to use. This is, if you treat trading like a casino, you have to expect casino-like results. And we already know at the casino, guys, the longer you play, the more you lose. You might win a little bit, but overall, unless you have a very good strategy and you're a professional, you'll most likely get wrecked. Okay, over time. This is the same for trading, guys. If you're treating trading like a casino, meaning you're buying into pumps, if you're FOMOing into big movements, if you're buying coins because you think they're going to go up, emotionally investing, you most likely lose. Okay, to become a profitable trader, to become a successful trader, you need to have an edge, whether that edge be your fundamental analysis, whether it be technical analysis, whether it be exceptional risk management, or whatever else it might be. You need to have a strategy to get you from point A to point B. Doing it blindly and with luck can work, okay? It can work temporarily in bull markets, but if you're expanding to the greater scheme of things over a larger period of time, you will lose. Think about all the people who made a lot of money in the 2021 bull market, only to lose it all in the recent crash, okay? So quick money goes quick, okay? If you make it with luck, you'll lose it because you don't know how to keep it, okay? Another thing is eliminate personal bias. And we've talked about this a lot on this channel, guys. I've talked a lot about the, that shutter effect where you've almost got those goggles on and you're not paying attention to what the charts are saying. If you're going to go off anything when it comes to trading and price action, going off historical price action is always going to give you the best chance of predicting the future price action in terms of statistics and probability. looking at the chart over here. For example, even down at $18,000, when we said the bottom was in, we said that months in advance, okay, months in advance. We said that all the way up over here, okay? There were people with personal bias hoping and betting for the price to drop to $10,000. Those people weren't paying attention to the reality of the fact that this was the level of which we bounced from to find the bottom on the last two occasions. They were ignoring the facts, ignoring the data, because they allowed their personal bias to intervene with their analysis. And this is why I really stress to everyone that you shouldn't be a bull or a bear. The moment you categorize yourself as a bull or a bear, or bullish or bearish, you're putting on a team mentality, and it's me versus you mentality, or you versus me mentality, and you're eliminating 50% of the relevant information that you could use to benefit yourself. There is no pride in losing money because you have a bias, okay? It is better to admit you're wrong and capitalize on the opportunity to make money than go down with your ship, okay? No one cares, no one's gonna remember, it does not matter. Okay, if you caught yourself on the wrong side of a trend, admit you're wrong, take your loss, re-enter, trade with the trend, make your money, profit. Don't hold your personal bias into bankruptcy, or don't hold it down until you lose your own portfolio. It's really not worth it, guys, okay? Eliminate your personal bias. Another thing is, often the best time to buy is when it's looking the worst. And I think identifying when it looks bad takes a degree of skill, because an unknowing individual could look at the chart, see a 10% drop and say, oh, this looks bad, now it must be a good time to buy. And although the idea of buying when it looks bad is usually the best time to buy is a good idea on paper, in theory, it does require a little bit more knowledge, understanding of macro trends, understanding of market structures, support lines, resistances, ECT, okay? The whole idea of that statement is, generally, when you've crashed down to a support, it is a better opportunity to look for an entry at that support than it is to expect the price to fall through until the confirmation has been placed in, okay? So generally, support is support until it's not, resistance is resistance until it's not. If you stay by those rules and play by those rules, you can avoid yourself a lot of pain. The next one is avoid catching pump and dumps, okay? Pump and dumps will not make you money. Pump and dumps may make you money once, twice, but it's only a matter of time until you jump in a pump and dump and you get burnt. It is a ticking time bomb. Once something has already moved up a few percent, 5%, 10%, you are too late. You have missed a trade. Wait for another trade. Look for something else. There are thousands of coins out there. There's another opportunity. Do not feel like you need to jump on every single coin that has moved a few percent. It's not how you trade. The next one is don't emotional trade, guys. So if you're having a bad day, if you're a bit run down, if you're sick, if you're tired, if you're grumpy, if you're volatile, whatever emotion you may be experiencing, do not trade. To trade effectively, to analyze the markets, to understand what you're looking at, and to put a strategy in place for that specific trade, you need to have a degree of mental clarity. You need to be understanding what you're seeing. You need to be clear. You can't be clouding your judgment with other bullshit. You have to understand what is going on, and this requires your emotions to be stable. The moment you let your emotions involved, whether it be, excitement, euphoria, whether it be fear and greed or whatever, the moment any of those get involved, you are automatically putting your trading at a massive disadvantage. You're jeopardizing your profits. You're jeopardizing your portfolio. Emotions in trading is not a good thing. Emotions are only going to damage you. The moment you realize emotions are damaging is the moment you become that little bit more profitable. The amount of people that were euphoric, expecting 100,000, 200,000, 400,000 Bitcoin over here. Insanity. It is pure insanity. Just like the people here expecting 10,000, 9,000, 2,000 Bitcoin. It's the same thing, guys. Euphoria and greed. It's the same thing. It's exactly the same thing. Fear and greed, all those kind of things. Those emotions play on people. They affect people's decisions. If you have your decision making affected, therefore you're going to impact your profitability. The next thing is always consider all possible scenarios. Nothing in trading is an absolute. There are no certainties. There are statistical probabilities that outweigh other probabilities, but there are no certainties. For example, once we reached 18,000, there was about a 95% chance we were bouncing from here to bottom was in. A 95% chance. It doesn't mean it's 100%, but it means it's 95%, okay? Even though I bought 18,000, even though I told you guys to buy 18,000, I had a strategy in place to get my members in 18,000, I was still aware of the possibility of a drop down, and I still had a game plan in place so that if we did go down, we knew exactly what to do, when to do it, to capitalize on the move. We weren't scrambling, we weren't panicking, we weren't thinking, oh, it's gone down, what do we do now? We already had a plan in place. And it's always good to have an exit strategy or an entry strategy in place no matter what stage of the market you are in. Whether you are down here, whether we are here now, we have an exit strategy, we have an entry strategy. Whether we push up here, we have an entry and exit strategy. This entire way up, as we start claiming new levels, we develop new entry and exit strategies depending on the price direction. Depending on where it goes, we can then execute those. Whether we want to continue to hold, whether we want to add to our positions, whether we want to deleverage, whether we want to de-risk, whatever it may be, we have a plan and strategy. Blindly holding is like throwing the dice at a casino. You are hoping it benefits it or goes in your favor, but there's always a chance there is not going to be. The next one is one that I see a lot of amateur traders suffer. And this is probably one of the most common things people get wrecked on for. It is called revenge trading. Now, revenge trading is when you have taken a loss and automatically you are either unsatisfied that you've taken a loss, emotional, upset, whatever it may be, and you automatically jump back in the market straight away, not even within a 20-minute period. You jump back in the market, try and make that money back. And you lose again, you jump back and you make that money back. Before you know it, you've gone on like a 20 trade loss streak or whatever it may be, 10 trade loss streak, and you've lost a considerable amount of your portfolio. And you sit back and you think, why didn't I just take the loss of my first trade and sit out for the rest of the day? Okay? And that is the main rule here. Every single day, you should have a maximum amount of money you're willing to lose within that day period. Once you have lost that money, you stop trading for the day. Whether it be $1,000, you don't want to lose more than $1,000 a day. If you lose 1,000, you'll stop trading for the day. You don't go again, you don't go again, you don't go again. Don't keep rolling the dice. Wait, be patient, look for entries, wait for prices to reach validations, be patient and wait for traders to come to you. Tomorrow is a new day, there's a new opportunity every day. There's no need to rush the process. The next one, guys, is the most important one, and this is always use risk management. Whenever you are entering a trade, and we'll show you an example over here. Whenever you enter a trade, I'm just trying to find, I'm losing it today, here we go. Say, for example, we're entering a trade over here. All right, we're entering a trade at the top of this support line over here. We're targeting, let's go $28,000, and we have our stop loss over here, just underneath. Every single trade, before you click buy, before you enter, you should be entirely aware of two things. Number one, the total percentage risk of loss, and number two, how much money you will lose if the price reaches that level with your capital investment. Now, you can alter your capital investment to therefore alter the amount of dollars you lose if the trade goes south. If you are not able to accept the fact that you can potentially lose X amount of money with this loss, therefore you should decrease the capital investment, okay? If you ever enter a trade and you're finding yourself selling before the stop loss is reached, it means you're emotionally trading. The reason you emotionally trade is because you're scared of losing money. Why are you scared of losing money? Because you've put too much money in. You're scared of losing that much money. It's not because you're scared of losing money, it's because you're scared of losing that much money. So decrease your capital investment, let the trade play out, let it go to profit, take your profits. That is it today, guys. I hope these little tips have been beneficial. I want to try a different video today because I talk about Bitcoin every single day. Obviously, if you want more information about Bitcoin, go watch our previous video. That will have everything you need to understand what's going on with Bitcoin at the moment, on the short term, on the macro. And if you're interested in joining our VIP, head down to the pinned comment, join the link, contact me, join VIP now. Heaps of relevant information there. We've had thousands of profits, thousands of percent profit this month already. 20 trades, 17 wins, 3 losses. Huge profits there, and obviously we're only halfway through a month. With that being said, guys, I'll catch you in tomorrow's video. Cheers. Okay, guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below Bitget is probably the best exchange out there if you're a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, could name a bunch more. KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.